Hey guys, welcome to my channel. So today's topic is support and resistance. If you already know about this, I'm pretty sure you are an experienced trader. Take this as a refresher or a reminder. But if let's say you are a new trader, you're a newbie, or you just step into it, or you have not stepped into it, this will be something super basic and super useful for you to start your trading journey. All right. And by the end of the video, you'll be able to learn how to use support and resistance, understanding the logic behind, find your entry point, set your take profit and stop loss, and coming out with your own trading SOP. All right. Without further ado, let's go. First thing, what is support and resistance? Right. Picture your support as a floor and your resistance like a ceiling. All right. So you have your floor, you have your ceiling. And let's just say that there's no gravity included in this equation. When you throw a ball between the floor and the ceiling, what will happen is the ball basically just bounces between the floor and the ceiling until either one is broken. And the floor and the ceiling itself represents your support and resistance. So for example, we have our ceiling here, we have our floor here, and what is price doing in this ceiling and floor is basically moving from point A to B to C to D until it is broken. And another example here, we have our ceiling, we have our floor here, and what price is doing? Moving in between the range from point A to B to C to D to E until it is broken. And why is support resistance so important? Okay, basically, you need to know that regardless of what are you trading, crypto, currency, commodities, bonds, stocks, or whatsoever, what is price doing most of the time is actually moving in between a certain specific range. And that specific range itself is what we call it as support and resistance, right? Maybe only 20 to 30% of the time, the market is actually pumping up or pumping down. But most of the time, when it's moving in between a certain range, that is where we can actually find our trading opportunities. So by identifying the support and resistance itself, you'll be able to find sharp entries with super high win rate. However, before we move into how to find our support resistance, there are a few strict rules that you have to bear in mind and you have to remember before you start trading it. And rule number one, any support and resistance must have at least 2 points of contact in order to be qualified to a support or resistance. All right, just remember this: 2 points, one line. All right, so for example, what we can see here, there's 1 point of contact, 2 point of contact, and 3 point of contact. And at this point, when we see these 3 point of contact, what we can do is we can just drop a line here, and that will be my resistance. All right. On the other hand, we can see there's 1 point of contact, two, and three. And by the third time, you can also plot it here as your support. All right. And here comes a question. So if let's say that this few point of contact hasn't happened yet, what do we do? Let's just try to rewind this. All right. So when the price is still at here, we can't tell any support and resistance yet. So let's just delete these two lines. Right. So what do we do here? We just wait. All right. Let the price do its job. And we run, we run, we run, we run, we run. Okay, and stop. So up to this point, we can already tell that there's 1, 2, 3, and there's 1 and 2. All right, remember at least 2 point of contact. So at this point, we can already plot our support and resistance. And what is price moving afterwards? Basically, just moving in between the range until either side is broken. All right, and it has broke up there. Another example here. All right, we can see there's 1 point of contact, 2 and 3. So 2 dots, one line, and we can just plot it here. And the other hand, same thing. There's 1, 2 and 3. All right, so we can plot a line here, and basically the price just moves in between the zone until it is broken. All right, and same thing. What happens if this hasn't formed yet? We wait. Again, let's just do a replay here. We cut it back before it actually happens. And we delete these two lines. All right. Up to this point, there's nothing could be told yet. All right. Don't worry. Just let the market play out until you see something. All right, and we just like play, run, and let's see. Okay, up to this point, okay, we can identify something already. There's first point of contact, second point of contact, and we can plot a line here. All right, on the bottom side, first point of contact, second point of contact, and we can plot our support here. All right, and look what the market is doing afterwards. All right, it's basically just moving in between the zone itself. All right, until either one is broken. And rule number two, support and resistance is never just a straight line, it's actually a zone. So going back to the example just now, and even though we plot our support and resistance as a straight line, what we notice is there's like some tails or a little bit of body that's going upwards and suddenly just reverse it down. And the common mistake that newbies make is they thought that support and resistance is just a straight line. And whenever you enter for a trade, you enter at your line and probably you set your stop loss slightly above your line. And what happens is it will easily just stop loss hunt and then go to your take profit, right? So how do we find out the actual zone? After we plot our first line here, we just clone this line and put it on top that it covers, the extra bit of things. All right. And we can also tell that after we plot this out, on this zone, the candles that actually reach to the zone are actually fake breakouts. And so then you can avoid being stop loss and you can still get your take profit. Right. So on the other hand, and what we can see is also same thing. There's a little bit of like extra that's being out there. And to be exact, the line can be actually plot somewhere around here. All right. Again, same thing. What we do, we just click this and we clone it and we just put it down here that covers the extra bit of the candlesticks. So we know that this zone itself is our support zone. If the market ever reached to the zone itself, it's still not considered as it's broken yet. Look at this. Price reaches here. Like if you assume that it's broken, you might go for a sell. And what happens is it just flies back up. Right, so another example here, we can see that roughly here we can plot a line here, we can plot a line here. Okay, so again, what happens is there's still a little bit of like candlestick that's out there, right? So again, same thing, you just clone it and just drag it up here. So then you know that this whole range is actually your resistance zone. If price ever reaches to the zone itself, don't rush to do anything yet. It might be a fake breakout. Until that is you turning down, then you can do your trade. All right. Same goes to other end. When you plot a line here, there's still a little fair bit that's out there. No worries. We just clone it, right? And then just drag a little bit down here. Okay. So, and what happens to this big chunk? This big chunk is essentially already a breakout, but unfortunately, it still went back up. It happens. Market doesn't always goes to the direction that you expected. And rule number three, support can become resistance and resistance can become your support. All right, we're back to the example just now. So initially, this is our resistance level and eventually price broke up to the resistance level. All right, and let's see what happens next. Price is moving up there and suddenly it goes back down to the original resistance that it has became a support, and after that prices shoot back up. And another example here, this can look a little bit complicated, right? This initially was a support. There's 1, 2, 3 point of contacts, and after it has broken through, what it becomes a resistance level. Once price move back up to the resistance level and it just go back down. Rule number four, which is the most important and most of the newbies has made this mistake. Plot your support and resistance that is near to your current price, but not those that is like way far off, because those doesn't concern you and it's not useful for you at all. So for example, this is the current price, current chart for Euro US dollar. And at this point, what we can see, all right, so we can see this can be a resistance and this can be a support, right? This is like literally super close to your current price. But if we zoom out, oh, there's another resistance here, and then probably we can see there's a support, and maybe this is also another support. Hey, come on, right? If you look at your chart with thousands of lines, how are you going to trade? Like you are just supposed to be focusing at this specific area. but not the areas that is like way far off. Again, that doesn't concern you. Please just look into the exact current price and what is near to it. And another example, as of now, we can see that, okay, probably here is our resistance and then here can be our support, right? That's near to current price, totally valid. But if we zoom up to the chart, we can see that, oh, here maybe we can also see another support, here's another resistance, and come on, that is too far away that you shouldn't be concerned about. So again, remove your unnecessary lines. All right, just look at what is near to the current price because those are the ones that's going to be beneficial for you, but not those that's far off. All right. Right, here comes the exciting part, my trading system for support and resistance. Right, you can refer this or you can just, just take it as it is, just copy and paste whatever, that's up to you. Rule number one, identify your support and resistance. And second, wait for the price to reach your certain key level. Number three, do not entry immediately when price reaches to your zone. Wait for confirmation. And number four, once all these three are aligned, just enter your trade without hesitant. And once you enter, set your take profit and stop loss to 1-to-1 risk and reward ratio. And I'm pretty sure that most of the content creators or traders will tell you that, hey, you should set your risk and reward to at least 1-to-2, 1-to-3, or 1-to-4. There's no right or wrong on this, but you need to understand that the higher your risk and reward ratio is, the lower your win rate will be. And the lower your risk and reward is, the higher your win rate is. Regardless, both works, but you need to pick your battles and accept the consequences. If you want to go for high risk and reward ratio, you need to accept that your win rate might not be high. But if you're going for a lower risk and reward ratio, then naturally you can get a higher win rate. So it just depends what suits you. Rule number 5, the most important part. Once you follow all the steps in the trading system and enter your trade and just leave it, don't try to interfere it. Like once you set your take profit and stop loss, just let it be and just let it run. Do not try to interfere it. Once you try to interfere it, it doesn't just affect your trading system, but it also affects how your mood is gonna be like. And when trading, aside from your technical analysis, what's more important is your mood and how do you manage your emotions. Because imagine like if you cut your trade early before your take profit and then eventually it reaches to your take profit and you might just feel like, ah, shit, I could have just hold. But remember this, like once the trading system is set, just follow it. And the last point, right? A lot of traders don't do this, but I will highly recommend you to do this. On every single trade that you are trading on support and resistance or any strategy that you are using, journal it. All right, journal it, and after a period of time, just look back to it and try to analyze how you were doing and how's your win rate and what are the things that you can be done to improve. Okay, so moving back to the charts. Okay, as of now, what we can see, there's one point of contact and two. So 2 dots, 1 line. I drop my line here, and what I also notice is there's a bit of tail up there, right? So I would like to cover the whole zone to plot out my resistance zone. And I clone it and I just drag it to here. So basically this zone is my resistance zone, all right? And moving to the downside, there's 1 point of contact and 2. All right, again, plot this out. And what to do next? Let's just wait. All right, after we plot our support resistance, we wait. Okay, let it just run. Right, this is moving a bit slow. Okay, let's just run it. Okay, right. So as of now, what do we see? Price pumps back up to our resistance zone, and then this next candle immediately drop back down. Okay, so which actually means that the resistance zone itself, it is valid. All right, so after I check these two things, the second thing is I wait for confirmation, right? So what is my confirmation? After the price shoot back up, the second candle it just immediately goes back down. So usually on this kind of movement, it's high likely a liquidity hunt. All right, so after this, immediately let's just enter our trade. We plot a short trade here, all right, because it has reached my resistance and likely it will go back down. And how do I set my risk and reward? I usually go with 1-to-1. So stop loss, I'll place it slightly above the candle here, roughly about 30 pips. And also I'll do it as 30 pips. 30 pips here. All right. So some people, they like to just drag all the way down to your support level. That's fine as well. But again, remember what I say, high risk and reward ratio essentially means a lower win rate. All right. So I don't want to take a lower win rate. I prefer a higher win rate. So I'll just set it to 1, 2, 1. All right. And let's see what happens next. Let it to run, let it to run. Okay, we have managed to take profit on this trade. Okay, and just so you know, I'm also curious what will happen next. Let's fast forward and see whether did it actually touches the bottom line. Ah, too bad. Okay, it didn't. So this is what I meant by, usually when you go for a higher risk and reward ratio, your win rate might be lower. Like on this setup, there's nothing wrong with it, right? It's just the price just did not goes back to the support. It happens. So in order to be safe or to achieve a higher win rate, that's why I would say that go with 1-to-1, and that's totally fine. All right, so another example here, what we can see as of now, there's one point of contact and there's two, right? So let's just plot a line here, be our resistance. On the bottom side, there's point of contact 1, 2, 3, and 4, right? Solid support line. Let's just plot it here. All right, or maybe here. Okay, I'll personally plot the first line at here is because this line touches most of the bottoms. All right, there's a bit of fair bit out there, but that's okay because we can just clone it and cover the remaining it, and it has become a zone. All right, on the top side, same thing. So let's just clone it and also cover the extra bit of it. All right. So now we are on a 1 hour time frame chart. And usually I wouldn't enter based on 1 hour time frame because 1 hour is slightly a little bit slow for me. And what I will do, I will go into M15 or M5 chart to look for a confirmation for me to enter. All right. So let's just swap it into M15 chart. All right. So up to this point, let me ask you a question. Would you enter for a sell trade? Right? So there's no right or wrong answer, right? You can, technically you can, because it's already a 2 point of contact. However, it is still a little bit risky. All right. And if you are willing to take the risk, and if it's stop loss, then you have to accept it. Right. But if you're not willing to take the risk, and eventually it reaches to your take profit, and you have to accept that as well. All of your actions has consequences to it, and just learn to accept it. That's the rule in trading as well. Right. So let's say that I'm someone that's a bit more risky. Okay, I see the second point of contact, and what I see here is there's a bearish engulfing candle after it touches my resistance zone. Right. So that gives me a solid confirmation that okay, the zone itself is valid and it's strong. So what I can do immediately here is I enter a sell trade. I plot my stop loss slightly higher, maybe give it a 20 pips. All right. And then I place my take profit at 20 pips as well. Make it as risk and reward 1-to-1. All right. Again, you can technically drag it to down there, but again, it's about risk and reward and also the win rate itself. So I prefer 1-to-1, same thing. After I plot it, I enter my trade and I'll just let it run without interfering it. And let's see what happens. Okay, congratulations, we have got our first take profit. All right, and what happens next? Let's just let it run. Okay, so now we have seen another entry point. All right, and when the price bounce back up to our resistance zone, and what happens next? The next candle immediately just pump it down, and it's a huge candle. It's just telling me again, hey, the zone is still valid, right? So again, what I can do, I just go for a sell immediately after I see this candle drop down. All right, probably around here. Okay, again, same thing. I set my stop loss slightly above about 35 pips, and I drag my take profit to 35 pips as well, somewhere at here. All right, and again, after you enter, set your take profit and stop loss, and just let it run. And let's see, do we get it? I think we did. Let's just drag it. Yes, congratulations. We hit another take profit. All right, and let it run again, and let's see if we still have any opportunities. Okay, so bear in mind, right? After we ended a trade here, technically the price is at our support level, correct? And when it reaches the support level, can we do a buy? Yes, we can. Okay, so here's the thing. Usually, I wouldn't recommend you to immediately enter a trade after a take profit or a stop loss. And that's mainly because that your mind will trick you into seeing things that you might not see it, or perhaps you just might got overconfident. All right. And let's just say that after you enter a trade, it's a take profit, and immediately you enter another trade, and let's say it's a stop loss. How would you feel? Right? Again, all your actions equals to consequences. Make sure that you can accept that, and that's fine. All right. So technically, when it reaches back to here, can we go for a buy? Yes, we can. All right. Once it reaches here to support, and what we look for is confirmation. And typically, the confirmation that I would like to look for is candlestick patterns. All right. And when I zoom in here, I can see that, hey, there's actually a good bullish engulfing here. So what I can do, I just drop down a buy here. Okay. And what I do is I drag my stop loss maybe slightly above the zone itself just to make sure that, and also prevent price to go for a stop loss hunt in my support zone. All right. I brought it here about 25 pips. Same thing, I drag it for 25 pips. All right. And let's let it run and go, 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 go. And let's see. Oh, too bad. This is what I meant by never enter a trade after your take profit and stop loss, because this stop loss itself really could have avoided it. Okay. But again, it bounced between your support and resistance until either one is broken. Okay, so in this setup itself, we grab one trade, two trade, and then we lost one. And that's fine. All right, you win two, I lose one. End of the day, I still win for one. And last, if you like my video, do like, share, and subscribe. And see you at the next video. There's a few links that in my profile that you can click on. There's my community, there's my partner broker, and so on. All right, see you soon.